Japan's finance minister, Katsunobu Kato, recently mentioned that Japan's $1.1 trillion in U.S. Treasury holdings could be used as leverage in trade talks with the United States, but he emphasized that Japan does not plan to sell these bonds. So while there was a mention of a large sum, it was not an actual plan to dump U.S. holdings. The comments were more about Japan's position in trade negotiations, not an actual intention to sell off their U.S. Treasury holdings. It's a complex topic involving economic strategies and international relations. Japan's holdings are significant, but the government has stated that they are committed to stable financial and economic policies. Selling a large portion of Japan's U.S. Treasury holdings could potentially impact the U.S. economy, but the extent of that impact would depend on various factors. U.S. Treasuries are considered a stable investment, and they play a crucial role in the global financial system. If Japan were to sell a large amount of its holdings suddenly, it might lead to increased interest rates and market volatility in the short term. However, it's unlikely to tank the entire U.S. economy. The U.S. Treasury market is very large and liquid, and there are many other investors who could potentially buy those securities. Nonetheless, it's a complex situation that involves many economic and geopolitical considerations. As of recent reports, Japan holds around $1.1 trillion in U.S. Treasury securities. Japan is one of the largest foreign holders of U.S. debt, along with countries like China. These holdings are a significant part of the global financial system. However, Japan's government has consistently emphasized the stability and long-term nature of these investments. International relations can be complex, and different countries have various perspectives on leadership and diplomatic interactions. During Donald Trump's presidency, there were moments of tension and differing views on various international policies and actions. However, it's important to note that diplomatic relations involve many factors and can evolve over time. Each country's perspective on past leaders can vary, and it's always good to look at multiple viewpoints to get a fuller understanding of such matters. While there were instances during Donald Trump's presidency where diplomatic tensions arose between the U.S. and Japan on certain issues, it's essential to rely on official statements and verified sources for accurate information. Japan holds over $1 trillion in U.S. Treasury bonds. Recently, Finance Minister Katsunobu Kato suggested these holdings could be used as leverage in trade talks with the U.S. However, he later clarified that Japan has no plans to sell these bonds as a bargaining tool. So, while Japan isn't planning to dump U.S. stocks or bonds right now, the mere mention of it stirred some concern in financial circles. That's because if Japan were to sell a large chunk of its U.S. Treasury holdings, it could affect interest rates and even shake investor confidence. But right now, Japanese officials are trying to calm the waters. They've emphasized that they value financial stability and don't intend to disrupt markets. It seems the original comment was more about Japan wanting to protect its interests in trade negotiations, not actually threatening a major sell-off. If Japan actually sold off a big chunk of its U.S. Treasury holdings, it could definitely rattle the U.S. economy. Here's how. When a major holder like Japan sells treasuries, it drives bond prices down and pushes interest rates up. That would make borrowing more expensive, affecting everything from mortgage rates to business loans. Higher interest rates can also slow down economic growth, since consumers and companies might spend less. Plus, a sudden sell-off could make global investors nervous, possibly weakening the dollar and shaking financial markets. But again, Japan clarified they're not planning to do this. It was more about showing they have leverage if trade tensions rise. Japan plays the long game, strategic, patient, but very capable of making bold moves when it suits their national interest. And with the global landscape shifting, especially with U.S.-China tensions, Japan might feel the need to assert more economic independence or rebalance its alliances. They also have their own challenges: an aging population, slow growth, and rising defense concerns. Holding over $1 trillion in U.S. assets gives them a lot of power, and if they ever felt cornered, they could absolutely use that leverage. It's not tanks and bombs, it's trade, currency reserves, tech control, and resource access. The battlefield now is economic influence. The countries are rethinking their dependencies. Japan, for instance, is tightly tied to the U.S., but it also needs to protect itself from being too exposed, especially if U.S. policy gets unpredictable. Same with China, which has been quietly reducing its U.S. Treasury holdings and pushing for more yuan-based trade. Even the BRICS nations are pushing for alternatives to the dollar. It's all part of this new era of financial power plays. We're seeing early cracks in the old world order. When countries like Mali, Burkina Faso, and Niger reject France's control, especially over their money and resources, and push back against US influence too, it's a strong signal. Leaders like Ibrahim Traoré are speaking up for real independence, not just politically, but economically. The dollar's power comes from global trust, military influence, and control over financial systems. But that trust weakens when more countries start trading in other currencies, like the yuan or ruble, or even look at gold-backed digital money. So yeah, it feels like a shift is happening. The question is, will it be a full break from the dollar, or a slow, steady evolution toward a new system where no one country dominates? Gradual makes the most sense right now. Only 3 countries in Africa have really stepped out so far: Burkina Faso, Mali, and Niger. That's a powerful beginning, but with 54 countries across the continent, it's going to take time to build that kind of unity and courage on a larger scale. And globally, most nations are still deeply tied to the Western financial system. Even those that want to break free are cautious because they rely on US dollars for trade, loans, and reserves. It's not easy to walk away from something so embedded, but those 3 African countries are planting the seeds. And as more people see them take bold steps without collapsing, maybe even thriving, it could inspire others to follow. The fear is real, and history has shown why. Every time an African nation has tried to stand up, like Patrice Lumumba in Congo or Thomas Sankara in Burkina Faso, they were met with serious backlash, sometimes even assassination or coups backed by outside powers. Even today, the tools of retaliation are more subtle, but just as powerful. Sanctions, economic pressure, currency manipulation, media smears, and even influence over military leadership within those countries. It makes sense that many leaders are cautious, but with Traoré and the others refusing to back down, it's showing the world that pushing back is possible. Japan is playing chess, not checkers. They're not holding all those US treasuries just for investment. They're holding them as leverage. It gives them a quiet but serious influence over US financial stability. Dumping those holdings would hurt the US, sure, but it would also hurt Japan. So instead, they keep that card in their back pocket. It's a form of soft power. We won't use it unless you push us too far, and that alone keeps the US listening. Japan's smart like that. They stay deeply involved in US markets while also slowly expanding their ties in Asia, especially with India and Southeast Asia. Japan's move into Africa is a big part of their global strategy. They're investing in infrastructure, technology, and partnerships there, aiming to build strong economic ties beyond just Asia. It's smart. They're diversifying influence and resources, knowing that Africa's growth potential is massive. Plus, with Western powers facing pushback in parts of Africa, Japan's less politically charged approach can open doors. They come in with tech, business, and development, not the baggage of colonial history, which helps build trust. It sounds like Japan is really positioning itself as a global player with deep roots across continents. Those countries didn't just walk away lightly. They stood up because the system was deeply unfair. The minerals, oil, and other resources belong to the people of Africa. But for decades, foreign powers have extracted them at bargain prices or through deals that mostly benefit outsiders. It's more than just economics. It's about respect, sovereignty, and dignity. When countries like Mali, Guinea, and Niger say enough, they're demanding fair treatment and a say in how their resources are used. This pushback challenges the old exploitative model and forces a reckoning on how global trade and investment should work. Japan holds over $1 trillion in US Treasury bonds. Recently, Finance Minister Katsunobu Kato suggested these holdings could be used as leverage in trade talks with the US. However, he later clarified that Japan has no plans to sell these bonds as a bargaining tool.